Welcome to the Tax Awareness Show. My name is Shiriboy Mutiba. I'm your host, and in the studio, I'm with Ayanda. We are talking everything to do with tax, and for that matter, in light of what SARS has announced, the tax filing season for that matter is open. And I'm just going to check on this website actually, what the dates are so that I give you the correct information. So basically on the SARS website, they're saying filing seasons for individuals, income tax returns filing dates, auto assessment for those that will be auto assessed. And I'm going to ask Ayanda here, what does it means when we're saying auto assessment is from the 7th of July 2025 to the 20th July 2025. And then filing seasons opens for non-provisional taxpayers. I also want him to unpack this thing of what is the non-provisional taxpayer so that you understand what it means. Who are not auto-assessed is from the 21st July to the 20th October, right, 2025. And then for provisional taxpayers is from the 21st July to the 19th January 2026. Ayanda, welcome to the Tax Awareness Show. Before you even go any further, what is this auto assessment that we're talking about that SARS is actually speaking about it here?
Okay. Again, thank you very much for the opportunity and greetings to your viewers. Yeah, the auto assessment. SARS, as time goes by, remember before, when the filing season is opened, find people queuing at SARS, and some they're submitting new returns, some they're not really taxpayers. That really will be paying anything to SARS. Then SARS use the technology to auto assess. So meaning now they use the available information to assess you. To say, I can see that you, Shirley Boy, you have income, salary from your podcasting business. So from this salary, I have to tax you this much. So SARS might not know that you also do other things, will only focus on the income that they see in the system that is attached to your name. And therefore SARS will assess you. When SARS assesses you, it means that you have a duty to respond to SARS. I'm not sure how much.
But maybe let's do this. You've got a duty to respond to SARS. But what I want to understand is, where is SARS getting this information, this income for that matter, that they'll be showing in that auto-assessed return? Where are they getting this information? Someone could be on, hey, is SARS spying on me? Where are they getting this information? I saw that they actually put my income or my salary for that matter, or for that matter, I've got that investment that I thought even my family doesn't know about it, but jiggy there's that interest income that is shown under my income tax return. Where is SARS getting this information in these auto assessment returns?
Yeah, SARS get this information from the third parties. If you're employed, your employer has to submit to SARS something called EMP 201, which is a monthly return for which they declare that they have paid the Shirley Boy so much money and is how much tax that they've collected. And at the end of the year, they provide you with the RP5, and that RP5 is already linked with SARS that this particular person has earned so much money for the period. Then SARS will tax you from that. If you have interests, maybe investment with the bank, the financial institutions, they have their own returns that they are submitting to SARS, where they declare who received what from what, So the system now is so interlinked that it's very difficult for you to evade. It's so linked.
But then what happens if, for argument's sake, you don't disclose the information that, let's say I'm generating other income. For that matter, let's say I've got rental properties. There's no third party that tells SARS that I'm generating this rental income from the properties for that matter. And should I be telling SARS that I'm generating this rental income? The side hustles, there are people who are doing this. Why should I be telling SARS?
Yeah, that's a very important question, because that's what always happens, whereby people feels like they're not obligated to disclose any additional information to SARS, of which that's wrong. If you fail to do so, you are committing what is called tax evasion, which is illegal and can find you in hot water. Now, if you don't, say if you have a rental income that you are receiving and you fail to declare that income, and for some reason SARS becomes aware that you have that income that you're not declaring over to SARS, SARS therefore can audit you. Then when SARS audits you, can go an extra mile, collect information from third parties that suggests that you have income that you fail to declare, and then when that happens, the most risk is that SARS is not your bookkeeper, nor your accountant, will not be considering the expenditures that are relating to that particular income. And therefore you can find yourself really having to pay a huge tax bill with penalties.
You're speaking of audit. What happens after the audit has been completed? I mean, is there any form of correspondence that a taxpayer will typically get from SARS?
Yeah, there is. When SARS audits you, the first thing that SARS does is to give you the letter notifying you that we're auditing this period to that period. And during that letter, in that letter, there are specific documentation that they need, that you must prepare and avail for SARS. Then from that, SARS will be able to use that information to verify, to ensure that what you've submitted is accurate. Now, let's say for argument's sake, SARS finds that you haven't declared that particular income. Then SARS will give you another correspondence that is called letter of findings. That says, for what you have given to us versus what you have submitted to SARS. Remember, now you're under audit. You submit this information that they've requested. You have already submitted, in most cases, a return to SARS. Then now they contrast the two information. And they'll say, no, your income that you have declared to SARS was so much. The income from the
information you declared,
that I obtained through the audit,
yes,
SARS, then is so much. Therefore, there's a discrepancy of a particular amount, and we're intending to tax you on that. The expenditures the same, but sometimes they are fair. Sometimes to say no, but to say that you have been doing business. So as a business person, you ought to incur costs.
Correct.
And they include those costs. At the end, they will assess you to say, from the audit that we have done, here is our assessment. So, but before we go there, there's a finalization letter that you receive. Then, having agreed on the contents of that letter, the imposed penalties, which SARS intending to impose you, your behavior, because the penalties are imposed based on your behavior.
Okay, maybe unpack that. What do you mean the penalties? I mean, someone could be sitting there and say, I got a penalty. How was my behavior taken into account in me getting this penalty? What do you mean penalties can be driven by a behavior? Can you just unpack that?
Yes. Remember, in South Africa, in terms of our tax administration, they have defined different behaviors that determines how the penalties will be lodged, maybe based in your assessment. It's either it's a tax evasion, which is the highest one. It's a negligence, the second highest. It's a failure to take, what's it called? Failure to...
Due care.
Yeah. And also the substantive, I've just forgotten now, but there are those 5 behaviors that the taxpayer, you will be charged based on when it comes to penalties. The biggest one, of course, is 200%. The lowest one is 10%, and you fall in these categories. If, say, you haven't, they believe that it was not an error, so then that's when they start to...
We can actually look at those behaviors that you're talking about.
I think it's 221.
2. Let's look at... it's somewhere on 29. This is the latest legislation. So they changed the...
Try. What was that?
These are there we go.
Yes.
The behavior. Okay.
Yes.
So there's a substantial understatement.
That's it, yes.
And there's a reasonable care not taken in completing return, no reasonable grounds for tax position taken, impermissible avoidance arrangement, gross negligence, intentional tax evasion, which is the one that you're talking about. It can go as far as 200%. Yeah, so that's exactly those some of the how one can end up getting what we call understatement penalty percentage as a result of this nature of behaviors. So there's about 6 of them, but we obviously don't want to get to that. But just before we even speak of the issue of audits and the issue of verifications, because typically SARS then will ordinarily start with verifications. In some cases, then they'll do inspection. What is the difference between SARS conducting verification on a tax returns and SARS undertaking an audit for a taxpayer?
Thank you very much. But maybe before we move to that one, I want to start to elaborate a bit on those penalties. I think you've mentioned 5 behaviors.
6
behaviors. Yeah. So from the 6 behaviors, you have a duty to mitigate your penalties with SARS. That no, SARS, I'm not someone who ran away from paying SARS. Here are the reasons why I find myself in this kind of situation. So that's what we call a mitigation for the penalties. So that's very important for the taxpayers to know that as a taxpayer, you have a right to satisfy SARS as to what led you to the point where you don't declare what is due to SARS.
Okay. Now, maybe to my question around the issue of verifications and the audit.
And then now, the verification, you submit a return, SARS request what is called a relevant information. So now you can see that SARS now doesn't have to notify you, but to submit a return, it triggers a verification. So then now SARS will say, okay, I see that you've submitted, but please provide me with such and such information before a particular date.
Yeah. What happens if within that particular date, I don't submit the supporting documents? I mean, and I'll tell you, this is a practical example where you find that, let's say let's use, because I typically see these matters of verification when it comes to VAT. You submit a VAT, and we know that SARS use their risk. They've got these risk identifications algorithms that is going on out there. They invested a lot in IT. You submit VAT returns, and your VAT returns used to be like this. All of a sudden, you're getting this huge refund. It can trigger verification in and you're getting that huge refund that you wouldn't ordinarily be getting. So now then SARS will then ask you for information, because maybe you don't have systems in place in your business, and you miss that communication correspondence from SARS. Again, it goes back to the miscommunication that we spoke about in the earlier episode. And now you're not responding to SARS within those prescribed timelines. What could SARS do in that case if someone hasn't responded to SARS communication during the verification?
In terms of Section 95, SARS has a duty to assess you based on the available information. So SARS has that right to assess you. So if you don't respond to SARS, say you are in business, you have provided SARS with financial statements when you're submitting your return, SARS can take away all the expenditure and tax you on the
gross revenue.
Gross revenue. And also penalize you.
Fair enough. But then you and I know that, I mean, think about it. Let's say I submitted VAT returns and then they reject my refund, meaning that they reject the entire input tax. And then they just say, listen, you owe us so much on output tax. Basically, that's what will happen. And it then means that I might end up being charged penalties. I might be having to overpay SARS. What rights do I have? What should I be doing? I know that I should be running to Shili Boy. I know that I should be running to Ayanda. But what do I tell Ayanda? What do I expect Ayanda to be doing? What will Ayanda do in that case?
Yeah. When SARS assessed you, you have a right to dispute the assessment if you're not happy with it. If you are aggrieved, then dispute it. And when you dispute it, you must dispute it with facts. That's when the advantage of having someone like Ayanda becomes very important, because it gives you that advantage of having somebody to analyze what SARS wanted versus what SARS was provided with. And then during that process, you can able to avoid the litigation steps, because you can able to resolve the dispute just right there. So the point of maybe in answering your question, you have a duty to dispute. From the dispute, that's when therefore now you explain to SARS what was the trigger for the for the assessment, trigger for the discrepancies between what you submitted versus what SARS has found when it's doing the verification. So I'm not sure if I answered your question.
You did, but also on top of that, what I want to understand is, after that verification, what sort of a correspondence should I be expecting from SARS if I don't? Remember we said SARS earlier on you said SARS may disregard your expenditures because you would have not responded to them. What sort of correspondence would I get to show that I owe SARS? And subsequent to that, what do I do if I want to reduce that particular amount that SARS says I'm owing?
SARS will provide with assessment in a form of IT-34, which is a correspondence SARS gives you, that now that you failed to submit what I wanted, here's assessment in a form of IT-34. That's number one. Then number two, then if therefore you decided to dispute the assessment, SARS is either will say, no, I agree, then offer you a revised assessment, which is lower than what they've assessed you on before. Or SARS will provide you with a letter saying, no, we don't accept your dispute. And then if they don't, then you can go to appeal, and then you go to litigations and so on and so on. you can take the legal route to dispute that.
You spoke of assessment. I think you mentioned some, I don't know if I misheard you, but I think I heard something about additional assessment. What did you mean when you say SARS will provide you with additional assessment?
When you submit your return, you get what we call the original assessment. Then when SARS used, maybe noted discrepancies in what you submitted and what they found somewhere, then they will provide you the additional assessment. So which is a second assessment to what you have been assessed before. So then that is maybe that's what triggered the additional assessment, because of new information came to the attention of SARS, and they want to assess you on that information, and therefore you.
Maybe let's dwell into more of a practical thing in your experience, because what normally causes people not to respond to SARS? What has been your experience around that?
There are various reasons for that, and one of those reasons is that, like I mentioned, that you have your tax practitioner, for some reason they couldn't find the letter, or find the letter but did not respond to the letter on time, because in South Africa, our taxpayers are still have a huge number of taxpayers that got into business as a way of creating employment.
That's true.
So who are not business fundis, they learn it as they go.
Which is fair.
So they don't really appreciate other nitty-gritties of compliance. And therefore, in that case, you find that people, they receive a correspondence, maybe they have their own profile. SARS send the correspondences into that profile. They can't go then open that profile. They don't really technologically savvy. They don't really understand the technology that you go there, you open, look at correspondences and so on and so on. So which is lead to them failing to respond adequately and on time to SARS. I think that's the case. Sometimes because of somebody did something wrong. That's another reality that we cannot avoid. That somebody did something wrong and now can't substantiate what is done. That's why SARS will say, no, but because you failed to correspond back to me,
we issued additional assessment.
Yes.
I want us to unpack this, and I'm gonna go back to the legislation. You spoke of Section 95 that deals with exactly that, where SARS would have issued that additional assessment. I want us to unpack it. In fact, they would have issued estimated assessment.
Yes.
So now, maybe let's deal with that. Subsection 1, it says SARS may take an original, additional, or reduced or jeopardy assessment based in whole or in part on an estimate if the taxpayer does not submit a return. So basically what it tells us exactly that it may actually it empowers SARS to issue those estimated assessment that we spoke of. So, but it also further speak to that the taxpayer still needs to obviously submit those information, the relevant material information that may be needed by SARS for that matter. So maybe unpack this Section 95. How best can a taxpayer utilize this to end up arriving at an assessment that it was actually best for them, or for that matter, the assessment that should have been an original assessment?
Yeah, thank you very much again. Look, when we talk of the SARS assessment, I just want to take you back into, when I think it's SARS service charter,
Yes.
the SARS strategy, they all talk about the tax policy that SARS has adopted. That tax policy that SARS adopted they said is a voluntary compliance. That voluntary compliance, I think which means that maybe let me start there. It means that SARS believes that the taxpayers are honest. Taxpayers, they do want to comply. However, due to limitations like the one I've mentioned, that some they did business as a way of career, not maybe to create employment. Then they're not a business fundis, but they do those mistakes because of they're not well educated on the business. They rely to other people and so on and so on. And some they're not even educated well to appreciate the tax laws. So, meaning the tone that SARS uses to talk to us as taxpayers is in a form of a client and a service provider. So there's a kind of friendliness. They don't want
service level agreement of some sort.
Yeah, they don't want to be harsh with the taxpayer. They want to be fair. Now, to depict that, maybe to level it to us, they embody it into a law in terms of Section 95. Section 95, which is an estimate assessment, it means that if you fail to submit what SARS requires, SARS have a right
to make an estimate.
To
take the original assessment and then turn it into an estimate.
Yes. But then now some people will see the estimate and say, no, but I've already assessed and I'm paying tax.
Which may be unfair, because then SARS would have removed the expenses, or for that matter would have removed the input tax in relation to VAT returns.
Very correct. But at the same time, it might be SARS focused on one source of revenue or revenue stream and have not declared other source of the revenue stream.
Yes.
So which is disadvantaging SARS.
Also, yes.
So it's not like the good that you haven't declared the information. Sorry, SARS has assessed you. And you simply say, no, I have been assessed. I pay what I've been given. Then SARS goes on and say, you still have a responsibility, if not an obligation, to declare the correct information to SARS, regardless of your assessment.
Which is Section 95, subsection 4.
Yes.
It says, the making of an assessment under subsection 1 does not detract from the obligation to submit a return or the relevant material. So you still, as a taxpayer, obligated to submit a required relevant material.
Exactly. And SARS can still come back and audit you. You won't say, no, but you assessed me. Because along the same piece of legislation, I think it's 5, if not 6, subsection 6. No, I think subsection 5. That says you can't dispute that unless it has been rejected by SARS. So that assessment that SARS has been, that assessment that SARS has leveled against you, you can't dispute it. You need to first submit the correct information to SARS.
Yes. I think that's it's section subsection 5. It says an assessment under subsection 1A or C is only subjected to objection and appeal if SARS decide not to make a reduced or an additional assessment after the taxpayer submits the return or relevant material under subsection 6, which is correct. You can't object to that assessment only if you haven't obviously submitted the relevant information and material as required. You're correct.
Which is good. But now the trick is, in most cases, SARS will simply say, no, you have not provided us with the exceptional circumstances for us to condone your dispute.
Which is for us to to allow
reduce.
for a reduce the assessment. Yes. Because maybe you've why you are raising that, because I'll agree with you, because subsection 6, I think maybe let's unpack that. Why you saying SARS may refuse to reduce? Why will SARS refuse now to, if you are submitting information, that's what you're saying. You submit a relevant material and then SARS refuse to reduce the assessment in terms to take into account the relevant material. Why will SARS refuse?
For me, maybe let me not get there, but SARS will refuse. But that refusal is not in terms of the law. Because subsection 4 says you ought to submit to SARS the correct version of information. So SARS, under no grounds, that's supposed to refuse you that right of correcting what is in their disposal. But due to some reason that I might not know within the SARS...
But remember also, I agree it could be those reasons, but it could also issues of prescribed timelines. There are timelines that will typically apply, as you and I know about that. So you may find that also is that. But then what happens once SARS denied you for that reductions of for you to be allowed to reduce the assessment? What other rights and maneuvering can one do?
Yeah, it went on to back to dispute. You have to dispute that kind of position by SARS, that they're not willing to listen to you because, say, you have not provided the information at the right time. And they want the extent of explanation why you have not submitted that information. So I think it's section 106.
Then it goes into the whole appeal and objection. But speaking of what you just say now, that they may have refused because you did not submit the information at the right time. That's subsection 6. It says the taxpayer in relation to whom the assessment under subsection 1A or C has been issued may within 40 business days from the date of assessment or a longer period as the commissioner may prescribe by a public request SARS to make a reduced or additional assessment by submitting a true and full return or the relevant material. That's exactly that. So you've got 40 business days. After you've got that estimated assessment, you've got 40 business days to actually submit a relevant material to ask SARS to say. But then people, because like you said earlier on, we spoke, people miscommunication, people don't watch their SARS correspondence, or for that matter, it gets into their profile and they're thinking that their tax practitioners, appointed tax practitioners, is looking after that information. Then as a result, they end up missing these 40 business days that they had to deal with. This is where then we can then ask SARS for that and say, we plead with you because of these reasons that you can condone us to submit this additional information for you to reduce this assessment and provide us with a revised an assessment after having taken into account this relevant material that you initially requested. But then if SARS then refuses, this is where now the issue of objections and appeal and things like that kicks in.
You're correct, but before you even go to object, you can apply for the reconsideration of the SARS position and provide better evidence, maybe explanation as to why SARS has that duty to reconsider, the position that they've taken, not to allow your information. Yeah, that's what you could do. Then, if therefore SARS refuses again, then you can go and object or appeal and so on and so on.
Object to their decision. Exactly. Then it falls within that other appeal and objections processes. But you know what? I think let's leave it there. And we should not get, our taxpayers should not even get to that position. But what it tells us here is that people need to read their correspondence from SARS and reach out to people like Shileboy and Ayanda to say, listen, I got this letter from SARS. What does this letter mean? What should I be doing? What is the next step? And I think that is very, very important. That is what we're trying. But exactly that, what I like what we did here is to say, if you don't respond to SARS, what could go wrong? You could get that estimated assessment, and that could be very, very expensive. And you might end up paying tax that you are not even supposed to have paid.
You're very correct. Maybe I will take you back to our previous episode where I said taxpayers must recognize tax as a significant risk. And the best way of mitigating that risk is to get a third person who will come in the form of a tax support to assess the risk and advise taxpayers very well. Because failing to do so, you will pay more school fees just for failure to take your business very serious. Because now you have to go to courts and so on, acquire attorneys and so on, and it gets to be more complex. So I think for me, that's one area that I can advise, that whenever you come across such a situation, you need to look for someone who can advise you accordingly and be independent.
That's it. You need to look for someone that can be independent and assist you with managing the tax risk. The tax risk is real, and it can actually distract you. And for that matter, it can even collapse your business. Please, please, please make sure that you manage your tax risk as efficient as possible and be proactive. You are not going to be reactive when the things are going south, and only then you are starting to act. But for that matter, it's very important to say, all the correspondence that you're getting from SARS, you actually read them. You actually reach out to the likes of Shiliboy and Ayanda to make sure that you actually understanding what your responsibilities are when it comes to those correspondence from SARS, so that the sooner you meet the required information, because there are timelines in dealing with SARS. So it's very important that you respond as efficient or as proactively as possible. Okay, my name is Shiliboy Mutiva. I'm your host of the Tax Awareness Show. Thank you so much for watching. Please engage with our content, like, share, and comment, and then we'll see you in the next episode. Good day.